This is Amy Norton with Live Love Louisiana, and I am here to tell you today the 7 steps to buying your first home. Step number 1 is become acquainted or refreshed with the home buying process. If you haven't bought a home in a little while, or if you have never bought a home, the process and the market have likely changed. So let's get together and go through, learn what to expect, and we'll talk about the whole process start to finish. The second step is get all of your ducks in a row. Basically, let's get you with a trusted lender who's knowledgeable, has good communication skills, and a good reputation. What this lender is going to want is they're going to want likely 2 years of your tax returns. They're going to want 2 months of bank statements and 2 months of pay stubs and maybe a copy of your driver's license. The next step is to fill out an online application. This is going to be where you're going to put in your debts, your income, any financial liabilities that you have on a monthly basis, so they can have a clear picture of what's going on with your finances. Also, the lender will be able to tell you once you have applied what dollar figure sales price you qualify for. They're also, with that, going to be able to give you an idea of what your monthly note is going to look like. So we're going to talk on terms of PITI, principal, interest, taxes, and insurance. So this is the whole picture of what your monthly note looks like, not just the principal and interest. Oftentimes, it is beneficial to include your taxes and homeowner's insurance in your monthly note. That way, at the end of the year, you don't have to come up with a lump sum to pay your taxes and insurance. So most mortgage lenders will set it up that way unless you have a specific reason why you don't want it done that way. The lender's also going to let you know what type or types of loans you may qualify for, and with that, what you might need to expect to put down on closing day, if anything. And they can also let you know an estimation of what your closing costs and prepaid items might cost you. In some cases, the seller will be able to assist with some of that. In some cases, you're responsible for that. So whatever is really important to you, we'll discuss when we talk on that first meeting, and we'll make sure that we get everything ironed out when we write a contract as far as if we're going to ask the seller to assist in any way. Step number 3. If the lender tells you that you may not be quite ready to pull the trigger on writing an offer and signing up to buy a home, let's get your credit cleaned up. Another good reason to go with one of our trusted lenders or a lender that you already know, love, and trust is that if your credit isn't exactly where it needs to be, they will give you some steps that you should take to increase your credit scores. Increased credit scores will give you the best possible interest rate that you could get. The lower the scores, the higher interest you may pay in getting a loan. So we want to make sure that you're getting the best rate possible and you're in the best situation so that you're ready, able, and you get the best rate in the end. Property taxes and homeowner's insurance is something that you don't pay when you're renting, but you pay when you own and you're buying a home. So every month when you're paying your note, you're paying principal, interest, and more than likely a portion of your taxes and a portion of your homeowner's insurance. So that portion of your taxes and homeowner's insurance every month is going into an escrow account held with your mortgage company. And this is sort of like a savings account for when your taxes and insurance are due 1 year after you make your first purchase, and so on every year after that. You can absolutely shop for homeowners insurance, even though most of the time your lender is going to have a recommendation or two for you. And of course, you want to make sure you're getting the coverage that you need and the best rate possible. Step number 5 is to research the areas around you. So again, we're going to talk on that first meeting, and we're going to talk about things that are important to you, things that you might research on your own in addition to the suggestions that I can offer you based on our conversation of what you wanted and needed. Search the school areas. Search the areas that are going to have medical facilities, shopping, entertainment, and whatnot that will fit you and your family's needs. Research the area and know where you want to be and where you don't want to be. Step number 6, repairs and maintenance. This is something that you definitely don't typically have to factor in or worry about when you're renting, but there are maintenance items and repair items that will absolutely come up when you become a homeowner. So one thing that is recommended is have a little emergency savings fund. Keep at least $1,000 in it. The more, the better. One other thing to consider when you're writing an offer or years later after you already own a home, you can purchase or you can ask the seller or negotiate a home warranty to be purchased for you, or you can purchase it on your own. A home warranty is typically good for the term of a year and covers a lot of the major items that could potentially go wrong with your home, like air conditioning issues, appliance issues, water heater issues. Some of the big ticket items that are inside your home oftentimes would be covered by a good home warranty. And home warranties range from about $550 all the way up to $800 or so a year. Extra things could be covered too, like swimming pool equipment, extra appliances, and so on and so forth. So home warranties kind of go hand in hand with repairs and maintenance, and it might be a good thing that might benefit you to have in the future. The last thing that you need to do to prepare to buy your first home is potentially save for a down payment. So there are some loan programs that require zero money down, and you may very well qualify for one of those programs. But if not, you may need some money to put down on closing day. So this could range anywhere from 3 to 5%, all the way up to 20%. And again, another reason to have a good, trusted, reputable lender is they can guide you as to the best loan program that will benefit you. If you need money down on closing day, they'll prepare you for that in advance. And hopefully we can find a program that fits your needs here and in the future as far as a loan program. So lastly, we have a list of our preferred lenders that can help you right now to apply for the loan and through the whole buying process. Get with us, email, text, or call, and we'd be happy to share our list with you. So those are the 7 steps to buying your first home. So Maria and I with Live, Love Louisiana would love to take those steps and walk side by side with you through the home buying process, whether it's now, in 3 months, or a year down the road. We'll be here to help you, and we look forward to it.